All right, guys, welcome back. Welcome to my channel. This is a stock market technical analysis channel, and let's get right into it. There's some interesting developments that are taking place, so I want to cover a couple charts and hopefully give everyone a heads up for tomorrow. I didn't want to put a video out today while the market was trading. I was kind of watching a few things, and sometimes if I put a video out too early, then I don't have enough information, or by the time the video gets out and you watch it, the market's posture or the technical setups might have changed. So it's always better to have more data, and videos at the end of the day will give me a clearer picture as to where the markets might go tomorrow. However, sometimes putting the videos out in the middle of the day or in the morning can give everyone a heads up for trading that day. So I try to do those every now and then as well. All right, here's the charts. Triple Qs. Really what you got to pay attention to. This is what I'm looking at. I know it looks like a big mess, but I'm trying to mark out levels as things are trading. We're at a point now, where we had a crash, a market crash, then we had a very substantial rally, and now we're at a point where it's kind of a battleground area where people are not sure. The market has to basically determine, is it done with the rally, or are we starting a new bull market, or is this a bear market rally and we're going to roll over? And so we're chopping around a little bit, and people are indecisive. That's essentially what it is. It's indecisive price action. I am positioned bearish. I think we're having a bear market rally, so I've taken positions based on that, and that's what I'm looking for. If I'm wrong, I'll stop out, take a small loss, and move on. But I think that's the way it's going to go, and the chart tells me that that's the way it's going to go. So at least the chart as of right now tells me we're going to get more selling. I can't say for sure that we're going to break the lows and go lower. That's not in the chart at this point, but it does tell me that I think that we're going lower, at least from where we're at right now. So here's your hourly chart. Here, this trend line right here, you notice that we had this, a couple of data points right here, a couple of reactions, and it runs up to here, and we had a reaction. Look at that big bearish candle right there. That was the breakdown. So when it broke that trend line, it broke and came down, and then we gapped up, and the price action today really helps confirm that this trend line is important as of right now, at least. I think we'll break tomorrow, but here's the thing. Look, each hourly candle was just grinding up this trend line, and then we broke, and then it was support. All right, so it was resistance and then support. If I go to the 1 minute, it really shows it a lot clearer. Look what was happening here. That trend line right here, we were just grinding all day, just tag, reaction, multiple reactions, just grinding, really low volatility, I guess, not a lot of range. So it was actually a really hard market. For me personally, I was having trouble just trading the market and realizing, it took me a second to realize that basically there was no money to be made today, is really what it came down to. And ultimately, I just ended up losing a little bit of money because I'm short, and this just was a trending day, grinding higher all day. So was losing money, but I didn't close out my positions because I'm swing trading the short trade. But took a second for me to realize there was really nothing for me to do, or no action I needed to take today. So that's no fun when you have days like that. But again, every trader has days like that where you're trying to overtrade, I guess, and then eventually you come to the realization that there's nothing you can do today to make the markets move. So that's just something that you have to fight. That's an impulse that you have to fight as a trader. But anyways, here it is. You've got tag reaction. Now look what happens when we broke. We broke to the upside, and then support. We held support again here, and then we broke. So there's a lesson to be learned, though, in this price action, and this is really what the point of this video is the information that I'm able to pull from just this price action. I want to explain it. All right, I'm going to let everybody know how I'm able to interpret what I see here. Whether it's right or wrong, I don't know, but this is how I'm interpreting it. This trend line, we were holding resistance all day. When we broke to the upside, we broke that and back tested it and then broke. There was no volume, all right? Zero volume, not an impulsive breakout. So that's something you always want to look for when you're breaking a trend line. If you're breaking resistance or breaking down through support, you want to look for volume to confirm that move. The more volume and the more impulsive the move is, the better it is at confirming that breakout. This breakout today was just a grind breakout, very low participation, not impulsive. And if I zoom in to this minute right here, this candle right here is very telling to me. What I see in this candle, and I was watching it as it was trading today, we spiked up. And this candle, and this is literally just 5 or 6 minutes before the market closed, we spiked up to the high of the day, just a nice spike right into like a resistance basically. And if you're at that moment in time, at that single candle, that moment in time, right before the market's about to close, the posture of this stock of triple Qs was bullish. We're at the day's highs. We broke this trend line here and we're running higher. It looked like an impulsive move higher. And if you're short at this moment right here, thinking about this moment, if you're short, you don't want to go home with a short position on a stock that just broke a trend line, just broke a resistance point, is ramping higher into the close, looking very strong. Because that means tomorrow you're going to get a gap up and it's going to potentially go higher. And so that was what this move was really intended to do, was to shake out the shorts, and it was meant to trick any longs to make them think that the market, this was going to close bullish. And the stock still closed bullish because obviously it was up today, but look what happened right after that candle. It sold right off, right down, closed right at support / resistance. Is actually closed slightly below it, but just pennies. So we'll just call it basically right there, and held that trend line. All right. So that I'm learning a lot from this chart. I learned, okay, there was a trap right here, the spike trap, instantly sold it off, closed basically below resistance. And that's the trick. So now you expect the payback, I guess, to come tomorrow. So anybody who took this breakout or thought that they were bullish, things were bullish, they got tricked in the last 5-6 minutes. They were tricked, and it was sold off and closed right there. And then another thing you want to pay attention to, look at the volume. Here's the daily chart. Look at the volume today. Really low volume. So we have buyers stepping in and bullish action that was not impressive, not impulsive, with no volume, very low volume. And the price action, I mean, look at it. It's just this grind higher. All right. So the point is also, when you see a grind higher like this, something that's grinding along a support line, and it's not really impulsively able to break higher, it's just kind of grinding along it. To me, that's topping action. I'll give you an example. Here's XLV. And what I want you to point out, this is the bearish rising wedge that was in place. Look at this grinding action right here. All right. It's just grinding along the support line. All right. It didn't really do that all throughout this entire bearish rising wedge. It was bouncing around. It would tag support, be there just a little bit, and then move up until really about the end. Then it just started grinding. We get one day where it pops, and that day was instantly sold into. And that essentially was the high of the move, for the most part. It popped, sold, went sideways, and then, and then broke that bearish pattern. So when I see grinding action along a support line where it's just barely able to hold that support, yes, it can hold it, but just barely, that tells me there's not a lot of enthusiasm. It's not impulsive. There's not a lot of people in there buying, and it's topping price action that you see. So when we go back to the Qs and we see this grinding along this trend line right here, that's what that tells me. It tells me that that this move up was not, there was no consensus from the market. This was low participation, and volume tells us that. And there's not a lot of impulsive buying here. So I think this move, whatever this rally was, is faded, and probably tomorrow. And here we can look at the futures. And as you can see, here's my futures line. I got a downtrend line here. I think it's going to make like a triangle thing. So I marked out the bottom here. I don't know yet. We'll have to see. If it breaks right through this, I'll just get rid of this. But for now, we ran right up into this. Here's this 86.90, which is basically like your resistance. We just ran right up into it, tagged it, and then that was pretty much the end of the day. And the end of the day, the end of the market closed at 4 o'clock or whatever right here. And since then, the futures open up, they've been selling off. So that tells me that tomorrow we gap down. As long as the sell-off sticks in the overnight session, that tells me tomorrow we gap down, which means we're back below resistance. We gap and then start to move lower. So I think that was it for that rally, which tells me that we're moving lower. All right. And then going back to the bigger picture, I know I'm going into a lot of detail around this Qs, but I just want everyone to understand everything that I see in the chart here. I think it'll give you a good idea, or at least help you anticipate trades coming in the future. The other thing is, look, we crashed down here. This is the hourly chart. We crashed down, and this was major support. I said that in a couple videos back. I said, look, 203.50, 204, somewhere right in there is major support for the Qs. So I expect to bounce off of that. And we got it. We ran down, tagged it, we bounced, it came back down and hit it again, and then we gapped up and moved higher. All right. We have no business being back down here again. If you're bullish, there's no business. We don't have any business being back down around this 204, 203.50 support level. If we're back down here again, I think we break, and that's just because typically when you tag something, if you tag a major support, you fall right into it. You're going to get a reaction and a bounce. But if it actually is going to be support and the market is bullish, it will bounce off of that and keep going higher. So the market should continue to go higher from here if it's bullish. If we break and come back down here, it puts the probability in the favor of the bears. I think we break that level. And if we break, we're going lower. And we've got some other levels marked out, obviously, as we go lower. So I'll just, this would be one right here, 194.50. That's probably your next major level of support. We'll probably get a little reaction right there. And then we'll just evaluate that as that comes. We could even gap down to this tomorrow. If we are in a bear market rally, and going back to, let's go back to the daily. If we're in a bear market rally and this rally is over, then expect to start seeing those lock limit down days again. We got a lot of those previously in this crash. It was a lot of money to be made on those lock limit downs. I know I pretty much cleaned up. And if we're in a bear market rally and that rally's over and the bear market's about to resume, expect to see those lock limit down days, and expect to see 1,000-point down days, at the open. Expect to see futures getting lock limit down. Expect to see big down days, big up days. You see those too, but you'll expect to see volatility expand. So that's just something that should play out if we're about to head lower. And then going back, let's go a little bit wider here. Let's look at the weekly chart here. Look, this trend line right here on the weekly 204.33. That's your bull market. All right, that's your decade-long bull market. So if we close the week below this, which we got a couple days in the week, and if we get some impulsive selling, we could be down there. It's really not that far down. 204, 203, not that far down. If we close the week below that, then that's very bearish. All right, that means that we're probably having a bear market rally and it's over, which means we should get more weeks going lower and at least retest these lows. But here's the thing. Everybody is talking about retesting the lows. I've heard two lines of thought. One is that the lows are in. This was a buying opportunity. We're going higher, and we're going to continue. The Fed's pumping too much cash. Stocks are, can't go down, and they're going to go higher. All right, that might be true. The other is that maybe we're going to retest the lows, or there's possibility of retesting the lows. One thing that I know about stock markets is they never do what people are expecting. So what I'm not hearing is, I'm not hearing that we break the lows. All right, I'm hearing, all we're going to do is retest the lows and that's it. But the reality is that nobody's expecting to break the lows and head, substantially lower. And I am. That's what I'm looking for. So that's why I've got these big old targets down here just hanging out. I think we're going to get there eventually, I believe, if I'm correct on my bear market call. And that's what I'm looking for. So that's it for the Qs. I think I've gone into enough detail. Let's talk gold stocks real quick and then we'll wrap it up. Oh, one other thing I want to point out, Apple. I gotta point this out. All right, this is also this chart is bearish, and the reason why, look, you got a bearish rising wedge right here. See the wedge that I've made, these upward trend lines? Look, you broke to the upside back here. So at that moment in time, the chart looked bullish. All you saw was like this big green candle. All you saw was, oh, look at that breakout, going higher. Everything looks great. All right, all we knew about this chart back then was a bullish looking chart. And so there were traders that took that. There were traders that saw that. They saw that look bullish. They bought that, they bought that and they went long. Well, what in reality of what happened is it failed. It was a false breakout. And you see these a lot on bearish rising wedges. You'll see the false break higher and then it fails. And it was a fake out basically. False breakout. We roll all the way down. We go below the wedge. All right, we're down below here. And then look at that price action again, just grinding along support. Can't hold the, not impulsively moving higher, just kind of grinding along that support line. Go to the 1 minute here. Again, same kind of thing. Just, grinding along this support line. Then we start to run up, fail, and then look at that fake out right there. 5 minutes before the market closes, this thing is at daily highs, all right? And then the next 5 minutes, it's, back down below and, basically closing right at the trend line right there. So that's not bullish. I think we're going to roll over. When I look for something, when it hits support, you want to see it bounce right off that support, and you want to see buyers, because the reason why it does that, buyers are watching for, bullish people are waiting for stocks to hit the support to add to their positions. And we're just not seeing that. People are not dying to add to their positions right here. So I think we're going lower. All right, now let's get into these gold stocks real quick. All right, so this one, I ended up buying my Barrett Gold back. I probably paid a little too much for it today. But, I just sold it 2 days ago, or a couple days ago, I guess. Was looking for a pullback. And we got the pullback. I just thought it was going to be more of a pullback. Let me go to the hourly chart here. So this pullback right here, I sold it right here. We got the pullback. It dropped here, but that was it. Buyers were stepping in. Boom, bought it back up. We're closing at 52-week highs today. So this thing's still bullish. So I bought it back and paid a little bit more than what I wanted to, because I owned it back here. So I paid $1 more basically, about $1 more. But the thing is, took a shot at trying to buy it at a cheaper price and just lost basically. So back in it, this thing's still bullish. When I look at the bigger picture, this is the monthly chart. This looks completely bullish. So nice impulsive breakout candle on the monthly. If this month closes with a breakout candle, expect this thing to continue to work its way higher. I think we're going to $50. I think we're actually going above that. I would say $75, $100 probably in the next little while, as it works its way higher. I'm not going to call the time, but I think this thing continues to make, higher highs and higher lows, work its way higher. So looks good. If you look at, let me draw this out. If you don't have a position and you want to get in or something, then, you know, maybe you look at this support line here. It's a pretty steep trend line, but we might break it at some point and come back down and, you know, test 21 bucks or somewhere right around there. So that would be a good opportunity to buy. But there is this trend line in place. You can see reaction from the lows here on the hourly chart moving higher. So again, it's bearish. Look at AEM. We're breaking up to the top of my, almost to the top of my target here. I sold mine already, but I bought it, you know, I bought it way back here. I bought it down here, made a 50-60% profit in, you know, about a month, and then I sold it. So I don't own this one, but I do own a sizable position in Barrick. Gold miners look good. That's the point, bottom line. If you have a gold miner that you're interested in, put it down in the comments below. I'll try to chart it out, try to look at it, see if I can find some good areas to add or to buy, or see if it even looks bullish. They don't all, you know, not all gold miners are created the same. So, yeah, that's really all I got, guys. So those are my thoughts on the general market. I tried to go into some more detail on how I read the charts. Hope you guys find some value. Leave me a thumbs up. You know, leave me a like if you guys value the content. Subscribe if you're new. Catch you guys on the next one. Bye.